This lesson will explain all about integrated asset acquisitions, where a fixed asset invoice is posted without a purchase order or goods receipt directly against the vendor account. An integrated asset acquisition is where one side of the posting is to the asset and the other side to the vendor or supplier, and where applicable VAT or tax accounts. It applies where you have more than one ledger, and the posting to the vendor and taxes must apply to all ledgers, but the posting to the asset may differ between ledgers. In order to have a different posting for the asset, the posting itself is split into two parts and a technical clearing account is used. The first posting, which creates one document, is between the vendor and the technical clearing account and applies to all ledgers. The other posting is called the valuation posting, and for each ledger there will be a separate document posting between the technical clearing account and the asset. In this scenario, you need to create the asset master record first, and then post the values. The app to post the values is called Post Acquisition Integrated AP without purchase order, and is currently still based on the GUI transaction using old-fashioned posting keys. First you fill the header with the usual dates and company code, and as it's a vendor invoice, you'll need to enter the invoice number in the reference field. You may also need to enter some text in the document header text field. The first line of the journal is split across two screens, because different fields may appear depending on which posting key and account you enter in the first screen. Posting key 31 is a vendor credit and tells the system that the account field expects a vendor rather than a GL account. The next screen is split in two, with the top part being the rest of the first line of the journal, and the bottom part being the beginning of the second line of the journal. As a minimum, you'll need to enter the amount, but you could enter taxes or more text if required. Normally, the payment terms and discounts should be defaulted in from the vendor master. To debit an asset, the posting key is 70 and the credit is 75. Because I've entered the posting key 70, the system expects an asset number in the account field. In addition, the transaction type, TTYPE field, is mandatory. I've entered transaction type 100 for a normal asset acquisition from outside the company. Here I've entered a tax-exempt tax code and the required tax jurisdiction code as it's a US company, but tax requirements vary per country. I've also entered a quantity and unit of measure, but this may not be applicable in all cases. In this slide, I simulated the journal to check first the entry view, which shows the posting between the vendor and the technical clearing account referencing the asset. If I then go into the asset accounting document, you can see all the entries for each accounting principle and currency. In this case, the leading ledger is shown, which is the local GAAP. This slide shows the parallel ledger and the IFRS accounting principle. Finally, the posted documents are shown. In this case, the local GAAP posting and the IFRS, a total of 3 documents. The operating document 1, credit the vendor and debit technical account for all ledger groups. The 2 valuating documents, 2 and 3, debit the asset and credit the technical clearing account, one in the leading ledger and one in the parallel ledger.